Thanks, Greg. And here's Hilton Tarrant with the business news.
Vela Northam shares skid as Impala rethinks its bid. The BER says GDP growth to fall to 1.9% next year. Athletes Gold agrees to merge with Australia's BMA Gold. And NYMEX crude oil falls below $50 a barrel for the first time since 2001. The oil share closed down 5% at 17,814. Gold currently at $744 an ounce. A barrel of Brent at 46. The rand is at 10.57 to the dollar, 15.70 to the pound. The euro at 13.26. Get MoneyWeb SMS updates on your cell phone while you're out of the office. To subscribe, SMS the word alerts to 37780.
Wayne McCurrie of RMB Asset Management is with us in the studio. Wayne, probably not a great day on the markets. I think David
was good to
David picked a good day to leave.
Put me in his place. This was absolute disaster. We spoke a couple of years ago about the irrational exuberance in the market. The statement by the then Fed chairman. Well, this is irrational pessimism. This is complete irrationalism. This is not normal market behavior, even vaguely. You've got the platinum index is down 80% since its peak a couple of months ago. It wasn't a couple of years ago, it was a couple of months ago.
And big moves, the 27% in Vela Resources, Northern down 25%. A lot of that has to do with the announcement from Impala yesterday.
But look, don't expect any other announcement other than platinum mines are closing production, canning capital expenditure projects, unfortunately retrenching people, and in cash preservation mode. Every single one is there. And so is every single other mining resource company. They are all in that mode now. The collapse we've seen, I think Brent crude is $45. Now, also a couple of weeks ago, we would have prayed for $45 on Brent crude. But it's but it's with a very different outcome for investors and the economy.
I suppose, though, that said, if we look at the platinum, and we're going to be talking more about it with Leon Esterhazen, but that's the best solution to a low price for platinum is to cut demand.
You've got to cut costs.
Supply.
You've got to cut costs, you've got to cut supply. But we are in a very normal commodity cycle, surprisingly enough. What will happen is production will be slashed. So let's just say output drops by, let's pick a number, 20%. But prospective output will drop by 40% because there's no new capital expenditure going in at all. Then in 2 years' time or 3 years' time, or the way it looks now, maybe 5 years' time, demand will pick up again. There'll be no new supply and the price will spike up again. So, it's a very, very normal commodity cycle. But the shares have been totally and utterly decimated. And especially today, a company to fall 17% in a day, you'd swear no one's ever going to buy a car and put an exhaust on it again, that there'll just never be another demand for platinum. Northern down 25%. The rest of the market was down, but in comparison, it did extremely well. It was only down 2%.
Yeah, well, that's the problem. If we look at Imperial, they're saying times are tough as well, but not unexpected.
Not unexpected. Which company is going to give you a positive trading update? I don't think anyone will. Unless you were long of the volatility index, no one's making money in this market. So, extremely tough times. I actually thought the worst was over in October, when a bit of liquidity and it seemed a bit of normality was returning to world capital markets. But now you get a day like today and yesterday on the Dow. Dow's not down too much at the moment. I think it's down about 1% at the moment. But this is completely irrational.
What about Liberty? What did you think of them?
Reasonable trading update, actually. Liberty is just about the only share that went up today, up about 2% odd. And they say, times are tough, but we will report lower earnings, but at least we've got earnings.
At least we can report earnings.
At least we can report earnings.
I saw a lot of people moving into money market funds. They moved out of equities, but they moved a lot of money into money market funds.
Absolutely normal for this sort of market. People will sell at the bottom and put it in the money market. And then when the market recovers again a year later, or 2 years later, or 4 years later, they'll put the money in back at the top of the market again. So this is every single player in the financial industry in the world. And that's what's partly caused the crisis, is people are moving to cash. So we got to live with that. But look, when you look at some shares on the market, now I'm just using this as an example, and I know their dividend's going to come under pressure. I just know this. But Old Mutual is trading at a 14% historic dividend yield. That's a 3 PE. With hindsight, we are going to look back now exactly the same as we looked back with hindsight to where the banking shares were a month or two ago. The resource shares are now at that level. This is just, quite frankly, craziness. They are just been pushed down too low.